Buckle up, everyone. You are strapped in and ready for Insurance Hour with me, your host, Karl Susman. Informing, educating, and entertaining, one policy at a time. This is Insurance Hour.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today. We have a special guest with us, Debbie Bremner. She is an expert in the California real estate market. Because we have her here, we're going to keep the phones off, but go ahead and call in or text your questions anyway. That number, 559-656-0317. Email questions to questions@insurancehour.com. We're going to get right to it with Debbie. Again, she is an agent for over 48 years, specializing in Los Angeles and Ventura County. She is a realtor, a member of the Southland Board of Realtors, a member of the Multiple Listing Service, and specializing in distressed properties. Debbie, welcome.
Hello. We've got a thing on our hands right now, don't we?
We definitely do, and I really appreciate you being here. We've got so many questions that have come in over the last few weeks, really, since we've been dealing with the wildfire, and I've been trying to handle all of the insurance-related questions, and people have real estate-related questions. They want to know, what is this going to mean for their properties? What is this going to mean for the values and all sorts of things? So I put a little list together. If you're okay with that, I'm going to just run through it, and you can give the best you can for everyone watching. And I'm sure as we get other questions and they send it to me, remember, they can send questions to questions@insurancehour.com. You can also call or text 559-656-0317. Those questions will come to me and I can pass them on to Debbie to get answers to you as well. The goal is to just get as much accurate information out there as we can. So if that's good with you, let me just dive right in.
Okay.
First thing seems to be coming up a lot is the impact on the real estate market, obviously. So how have the Los Angeles wildfires influenced the real estate market in terms of inventory, pricing, and demand?
Okay, so I just want to start off by saying that you know as well as I do that all of this is sort of in flux. What I can say to you today may not be true a week from today. Some of your clients, my clients, are just still in the shock stage. Some are luckily beginning to make first steps, but what has happened overall is a massive amount of inventory is gone from the market. And suddenly, and you've got people who need homes but can't find them because we already had a tight real estate market. We had high interest rates. We had longer than average market times. We had very little movement and excessively high prices, quite frankly. We are, as you know, one of the most expensive areas to live in. And now all of a sudden, on top of that layer, we have displaced persons. So for the moment, I think some of your clients may be saying to you, as I know mine are to me, it's costing me more to rent than it did before, or it's costing me more to find a house than it did before, and my monthly payments are higher, and why is that? Well, for the short term, I think it's possibly true that the market may push up a little bit, only because you've suddenly got displaced persons affecting the market. But the interest rates aren't going to change. The amount of inventory has shrunk even more. So honestly, I think the market, with my best crystal ball, the market may take a little bounce, but it is going nowhere. It is going to be a tight market for a long time to come. Construction takes time. Rehab takes time. So all of this is going to be difficult on the market.
It's interesting. So the people that lost their homes in some odd way have made the market for the homes that remain more valuable.
Yes, in the short term, but pretty soon those people will move out of the city, move out of the state. There's a lot of people that are just saying, I don't want to do this again. This was the time. This is the opportunity for me to take the money and run. There's a lot of people, if they don't rebuild, what's going to happen to those lots? What will happen to those neighborhoods? Because you have neighborhoods where there's 1 or 2 or 5 houses standing on the street and the rest of the street is dust. It's very early to tell, especially because some people aren't even back in their neighborhoods yet to see and make decisions and everything else.
Right. Now, you mentioned that people are having are paying more because they're displaced to try and find places to stay and places to live. Now, we had talked about this in the past. Can you speak to people that are seeing all of a sudden a place that might have cost X dollars to rent, and now all of a sudden they're being told, give us your best offer, and they're clamoring to get something. What does the law say about, and what type of consumer protections are in place to prevent people from actually doing that?
I'm so glad you're addressing this because it's just a pet peeve of mine. First of all, there's a large segment of the population that doesn't know about the law. It's been talked about on the news, but still people don't know. And when you're going out looking for an apartment and you need a place to live, short-term, long-term, whatever, it's very hard to say, well, the week before the fire, this would have been worth X. And now it should only be worth X plus 10%. So to be simple, that $1,000 a month apartment should not be renting to you now, today, for more than $1,100 a month. But suddenly, owners are saying, give us your highest and best offer, and people are throwing money. One client said to me the other day, I bid on an apartment and I bid at face value. Someone came in, gave them a 3-year lease, paid the first year upfront in cash. And I'm not talking about a, $100 a month apartment. I'm talking about a house. And they said, we can't compete with that. We don't have that kind of capital sitting around, nor will we, because we're going to need to be paying not only our rent, but we're going to be paying our property taxes and we're going to be paying our mortgage. So the stories that I'm hearing are shocking and sickening. And I want all clients out there to know, yours, mine, anyone's, if you're going looking for an apartment, if you're interested in a piece of property, get a hold of your attorney first or get a hold of your realtor and have them do a market evaluation for you. And if there's price gouging, there's a $10,000 penalty to that landowner, and there's possible 1-year prison sentence, and they are enforcing. And not only that, they're enforcing it to the realtors that are doing it. So This should not be happening. This is very serious, and they're enforcing it right now today. So if you need a home, don't get gouged. Don't lose a house.
Don't get taken advantage of.
Don't lose a house because you didn't want to get gouged, and don't get gouged and give that to someone who shouldn't be doing it. We have to be brothers and sisters to each other during this. You
should be, for sure.
Yeah.
Let's take a quick break, and I want to talk about this a little bit more. This is Insurance Hour. Special guest, Debbie Bremner. Be right back.
Let's talk about earthquakes for a minute. Look, we know we live in earthquake country here in California. Powerful, devastating earthquakes have happened here before, and science says that they will happen again. They can't tell us exactly when. They can just tell us that it is going to happen. Count on it. Prepare for it. Did you know that earthquakes are not covered by your homeowner's insurance policy? You need a separate policy to give you the peace of mind that you will be able to recover without getting financially wiped out the next time we get hit with a big one. There's a great company here in California that will provide you with earthquake coverage you need at a price you can afford. That company is GeoVera. I have a policy through GeoVera. I really like how easy it is to choose from all of their great coverage options, backed by the financial strength that lets me know that they will be here for me when I need them the most. Go to getquake.com/insurance hour to learn more. That's getquake.com/insurance hour. Make sure you're ready for the day when the ground shakes again.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here with me today. Remember, the phone lines are closed, but you can call or text in your questions. That's to 559-656-0317, or send your questions in to questions@insurancehour.com. Today we have special guest Debbie Bremner. real estate agent extraordinaire, and we are talking about the impact of the California wildfires and giving some tips and important information for people that are directly or even indirectly impacted by these fires. Debbie, thank you so much for being here again.
No problem.
So I want to move on from what we were just discussing and talk a little bit about appraisal and valuation, because we have a lot of questions from people that are asking, well, now I used to have a $10 million home and now I have dirt. What is that worth and how does that all come together? How can you explain from a market perspective and a marketability perspective how that works?
Okay, so first of all, most important thing to remember, appraisals are subjective. Appraiser A might think differently than appraiser B. So it's who you get and the mindset that they have in the moment. Also, appraisers will look at the schematics of a neighborhood and say, well, the Eaton fire, there's no town left, or there's no infrastructure left. Same with Pacific Palisades. It's not the same as a single house that burns in a neighborhood because the kitchen caught on fire. It's what you had before versus what you have now versus how long it's going to take for it to ever be comparable to what it was before. And that includes schools, libraries, gas stations, grocery stores. So all of that will impact your particular lot, your dirt, because the availability of services for you is just as important as that 2-bedroom, 1-bath house. The other thing is to remember, your 2-bedroom, 1-bath house that was there and the one next door, now all of a sudden there may be, yours is gone and the only one left is that one 2-bedroom, 1-bath house. It has decreased in value, and if it had to sell on the open market today, people would say, no infrastructure, no grocery stores, no schools. So it decreases in value, hence yours does. But what an appraiser does is they look at the cost of your dirt, and they look at the cost of replacing your 2-bedroom, 1-bath house like the one next door. Then they deduct the cost of what it will cost you to build another 2-bedroom, 1-bath house in today's dollars. So for the people in the Eaton fire that had 50, 60, 70-year-old houses, what they had versus what it cost them to replace now is it's not comparable to the 2-bedroom, 1-bath house next door that didn't burn down. Make sense?
Sure. It's a brand new house.
It's a brand new house, but it's more expensive to build. So the deduction from the value is greater than what they actually had, if that makes sense. So the land is always fixed and it's easy to evaluate. But if your house was worth $500,000 and it costs you $250,000 to build a new one, then you get the cost of the dirt and the cost that's different from the price of the two houses, and that's the value of that.
I'm sorry, I got you saying dirt. Everyone calls it land value, and I sarcastically.
Land value too, so it's really, I had to keep.
I know, I did that to you. I'm sorry. I try and make it a little bit less painful when you just say dirt, because land value, it's a little, sometimes it's harder to imagine.
And you people out there that just have land value left, treasure that little bit of land as you're making your decision-making process. But anyway, sorry.
I want to talk about that.
Okay.
A lot of people have to make a decision. They have to decide if they're going to rebuild the home where they are, if they're going to rebuild that home somewhere else, or if they're going to just leave and buy a home somewhere else. Those are three options that most insurance policies offer. What do you say, and what do you think most people, or what are the considerations they're going to make when they're coming up with making that big decision?
Well, I'm going to defer some of this to you, but I'm going to say that what some people that I know of, not necessarily my clients, but have encountered is they were either non-insured or underinsured. So the value of the structure plus land that they were holding, they don't have enough insurance to rebuild. So that limits your option right away. If you had the appropriate amount of insurance, the question then becomes, can I carry the property long enough to rebuild? Can I get a loan to rebuild, or do I have the capital? And this will be a very different answer in the Palisades than it will be in, say, the Eaton Fire or various other places that have burnt structures. I'm just saying there's a different buyer profile in the Palisades, and not everyone in the Palisades is easily going to pass through this, but there's certainly enough that have the capital or the means to get capital to rebuild. Beyond that, it's, do you want to live in this place again? And do you want to work for a decade to recreate? This is what the people in the Eaton Fire are saying. Altadena is a very special neighborhood. I say is because it is, and the people in it are neighbors to each other still and are doing amazing things with each other. But the reality is, are they willing to not only build a house, but are they willing to do the work put in to rebuild a community? And those questions are so personal. I don't think you answer for your clients. I certainly know I don't answer. We look at the possibilities, and then what would they do with the land if they didn't rebuild? It's going to be a long decision-making process.
It is, and they have a lot of things that they have to consider on top of that, because there are a lot of implications. Just the simple fact that they might have a 10-year-old now going to school, and by the time they get back and the house is built, they might have a 13-year-old, and
going
things
to high
might
school,
be different. Right,
yeah,
with different friends
absolutely.
and different desires and things that are important.
Absolutely.
I want to talk a little bit more about the socio-economical impact of this after we take another quick break. Again, we have Debbie Bremner with us today talking about the real estate impact and the market impact of the California wildfires. This is Insurance Hour. I'm your host, Karl Susman. We'll be back in 60 seconds.
Ladies and gentlemen, boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Gray.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences. This show is a weekly trip into the world of the Disney theme parks and resorts. And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the windowtothemagic.com podcast.
Maybe there's a name for this, something like Disnotic obsession. Please visit windowtothemagic.com for more information, or you can find us on Apple Podcasts and in the iHeartMedia app.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here with me today. Our phone lines are closed, but please do still call in with your questions. You can leave a voicemail or send a text, the number being 559-656-0317, or send your questions in, as always, to questions@insurancehour.com. Today, we are so fortunate to have Debbie Bremner with us. She is a real estate agent expert, and we are talking about the impact of the California wildfires on the marketplace in California for real estate. Debbie, I know before the break we were talking a little bit about everything. I want to focus, if I can, a little bit on the social challenges that you think we're going to be facing for people in these different communities as they're making the decision about if they're going to rebuild, if they're going to stay, and how they're going to afford to do it.
Right. That's a great question. So, in a nutshell, in Los Angeles, for those of you who don't necessarily live right here, we are in a service economy. So I would say that the most recent data says 70% or more of Angelenos are right now living paycheck to paycheck. This is pre-fire data, okay?
70%.
70%. That's a hefty number. So that's a fragile economy by any means of looking at it. And the reality is the service industry, which in our area employs housekeepers, drivers, landscapers, small business owners, it's coming to a screeching halt. Not just in areas like Altadena where the town is gone, but all of those people who are working in Pacific Palisades or ancillary areas, the lawns are gone, there's no landscaping needed. Those businesses are all taking a hit. And if they were just on the cusp of living paycheck to paycheck, the most serious part of this, the ripple effect, the housing is certainly part of it, but down the road, we have a problem because if businesses fail, if individuals fail, we don't have income as a state, and the infrastructure for the state collapses, the financial infrastructure. So I think that's an ongoing issue that needs to be addressed in a real heartfelt way, needs to be looked at, there needs to be support for the community here. And it's not just rebuilding, although that's part of it. The other thing is, in Los Angeles, the cost of living crisis, we are 50% higher than most every other area for living, cost of living. So if you're already there and now suddenly you have this other thing on top of it, groceries, everything is that much more expensive. It's not a political question to say, guys, we need to address this right here, right now, because you have a city that cannot rebuild without a financial structure. So I think those two things are super important. Obviously, the impact, not just on the property values that burned, but all the property values all over Los Angeles, because if the infrastructure doesn't rebuild, if there's not people working and people surviving, then everything else will go down. And
it's hard to, I'm sorry, go ahead.
No, that's fine.
I'm saying it's hard to imagine the trickle down of this, and I've talked to a lot. Right? It keeps going and going and going. You start out with just the business, and the business has employees, and of course they can file for unemployment, and that's only going to last for so long. And what happens because there's no other place for them to get that specific job that they had? So I think it's important. I want to mention just two places that people can go. They can go to FEMA. And yes, always go directly to them. Do not, if you get a text and it claims to be from FEMA, it's not. They're not reaching out to you. It's a scam. Yeah, they're not doing that. So go directly to there, and I'll put links in the show notes. And also, what people don't realize is you can go to the SBA, to the Small Business Administration, even if you're not a business. That's just the arm of the government that lends money. So one of the things that they do is, if you have poor credit, you automatically get in. So there are things that they have designed specifically for people that really need the money. So again, if you're getting a text from them, it's not them.
Yeah.
Go to those websites directly.
And that's part of the other thing that's so tragic about this is there's a lot of scams out there. There's a lot of things going on, which I'm sure we'll get to, but ultimately I think communities are rallying around each other. We have to be very careful that we aren't taking advantage of those in the most dire straits and addressing their needs.
What are you hearing about as far as scams and things? I know what I'm hearing about, and I've talked about them, but what types of things are you hearing that people are encountering that they should be aware of? What are some red flags?
I've heard, I had one client who is older, not particularly savvy. Someone came to their house and said, I'm working with the government. I will take care of your property. We will get your house rebuilt. You sign the deed, and that gives us the right as the government will put new housing on. She didn't know. She didn't know from what. I mean, she's been in her house for 60, 70 years. And that kind of thing, I mean, I will tell you that all arms of the government in California are tracking this stuff down. People are complaining. It's getting stopped, but it's like whack-a-mole. As I'm sure you know, you whack one and another one pops up down the road. So it's just on and on and on. People agreeing to lend money who are not really money lenders but want to take a deed out against your property so that you can do repairs on your home. Not good.
What I keep telling people is if you're getting reach outs, that should immediately be a red flag, because legitimate organizations don't tend to solicit for business. They will wait for you to reach out to them.
Yeah, a bank isn't going to come to you and say, I'm happy to put a new house on your property. You're just going to need to give me a deed against the property. And, and if someone's owned their house for 70 years and there's no loan against it, suddenly they have the first trust deed on the property.
They effectively own it.
They effectively own it. No questions asked.
Wow, that is horrific. I want to talk a little bit more about some consumer protections after we take our next break. It's important that we let people know so they can be aware, even if they don't remember the specifics, just the fact that they're hearing about it, and hopefully they can be a little bit more alert and on the lookout for some of this. Because like you said, once they catch one group of people, there's another one that just comes up and starts to do something else a little differently.
Right.
Insurance Hour with me, Karl Susman, special guest, Debbie Bremner. Be right back.
Have you been dropped by your insurance agency or seen your premiums skyrocket? Susman Insurance is here to help. We're a family-owned and operated insurance agency that's been serving our community for 2 generations. At Susman Insurance, we know how stressful it can be to find the right coverage, especially when prices go up or you're left without insurance. That's why we're committed to finding you competitive rates, whether it's for fire, home, earthquake, flood, auto insurance, you name it. We've got you covered. Give us a call or send a text to 310-820-5200 or visit us online at sussmaninsurance.com. Plus, stay updated on all things insurance by joining our text group. Just text 567-4CARL with a K. That's 567-367-5275 to get the latest updates straight to your phone. Susman Insurance, your family's insurance solution.
Hello. This is Insurance Hour. I'm your host, Karl Susman. We are with phones off today, but still taking your questions. You can call or text 559-656-0317. You can also send your questions in to questions@insurancehour.com. Today we have our special guest, Debbie Bremner. She is a real estate expert of many, many years, and she is helping us understand the real estate market impact and some more that we are seeing due to the California wildfires. Debbie, before the break, we were talking about the impact of the emotional, really, impact and some scams that people are having to look out for. I want to pivot a little bit and talk about some of the hard numbers. People have a mortgage. And some people are looking to close escrow on new properties today, tomorrow. So tell me, how have the wildfires impacted mortgage lending and funding for properties in the specific wildfire areas and surrounding areas?
Okay, so the straight, simple fact is that, as we all know, this has been declared a disaster area. Once it was declared a disaster area, a moratorium was put in place on financing, funding, closing, any purchase, sale, whatever you want to do. So that's within a 10-mile radius of anything that is within the area considered to be disaster area. All right.
Okay.
So right now, it's like being in a holding pattern over LaGuardia. If you had not closed your house the Friday before the wildfires broke out, you would be in trouble at this point in time because nothing happened from that week on. So all those people are just sort of stuck.
What about people that have, I don't mean to interrupt you, but this is one that I get all the time. What about people that have a mortgage rate lock?
I don't know. You have to talk to your individual lender about what they're doing on their locks. I think a lot is going to shake out of the trees in the next little bit. Gavin Newsom has made an agreement with the 5 major lenders to address the issue of what if you have a loan on your, as you call it, your dirt, your land. But if you're in escrow on something, and which is what I'm assuming you're talking about, if you're in escrow, every lender at this point is still handling that differently. So if you went to a mortgage broker, call your mortgage broker, have him find out for you. If you went to Wells Fargo, call Wells Fargo directly and have them tell you what they are doing. Everyone has their own decision to make about that until and unless they come together as a group and they say, we have an end date of the disaster as of April 1st, let's use for the example. So we will close all those loans at this rate on April 3rd. Okay, that may be how it shakes out. It may not. It may be that we're going to keep watching the mortgage rates and you may lose your lock. So we shall see, but it's not decided as of when we're speaking right now.
Interesting. All right. So I guess the real takeaway from that is ask. Don't assume, and just because you might have a friend or a neighbor or someone that just knows everything tell you something that might not necessarily apply to you. It might be unique to the bank that you're actually working with.
Yeah, and please don't talk to your neighbor who works for Wells Fargo if you're going to B of A, because your loan may be specifically different. If you have a private lender, go to your mortgage broker and say, what are my options? And should we pull out of this now, or should we do so? What should I do? Because I know I can't close until the disaster is lifted, and we're still working on the fires. So again, keep asking for information. Don't feel like you're the squeaky wheel. You should be asking for information.
I always say, squeak away. You need to be your own advocate, right? Go be the squeaky wheel.
Yeah.
Since we're talking about banks and loans, what happens for people currently that their home was either a total loss or a partial loss, or for whatever reason they will not be able to occupy that home for a significant period of time? How does that, or does it not, impact their loan obligation? And is there anything going on to try and change that?
Well, right now, the moratorium as it stands is for, I believe, 90 days at this point. Those are 5 lenders. That is not, if you have your loan from a private lender, they don't have to comply with that. So again, call your particular lender. Property taxes are still going to be due. So understand, if you just have a lot now, you still have to pay property taxes on it. Okay, there is no moratorium on that, at least as we stand now. But call your lender and find out how long until you have to make your next payment. The large lenders have already notified clients, but some clients don't have mailboxes or access to. So get in touch with your lender and specifically ask them, when do I make my next payment?
I hate to put you on the spot. We keep talking about the 5 big lenders. Do you know offhand who those 5 are for people that might want to know? Is mine one of those?
Yeah. So in California, we have Wells, we have Chase, we have B of A, we have Citi, and
I was so impressed, rattling them off. One more.
Give me time. It'll come to
you. All right. It'll come to you.
Senior moment.
It'll come to you. Okay, so people, again, should be aware that they still have those mortgage and those payment obligations. They may or may not have the ability to pause them temporarily, but they should check with their lender to find out those specifics.
Yeah, and I have gotten this question a lot. I'm sure you have too, so I'm just going to throw it in. When you are pausing the payments, you're not pausing. You don't get credit for those payments. You're just moving the end date of the close of your loan out by 3 months. And then if they give you another 3, you're moving it out by another, but you're not, there's no savings here. It's just time for you to get some capital, get on your feet, make a decision about what you're going to do. That's all that is. So please.
Purely cash flow related.
Yeah, it's not a rebate. It's a moratorium.
Makes sense. And that's important. It's not free money.
No.
The bank is not being generous with you.
No.
They're just simply saying, we'll wait to get your money a little longer.
No, because these lenders are in a world of hurt too. I mean, everybody isn't. Yes, their hurt is different, and I'm not minimizing. But this.
I want to talk about that after this break, about what we might see the lenders do if people do start defaulting. So let's take one more quick break, and then let's talk about that. This is Insurance Hour. Special guest Debbie Bremner with me, your host, Karl Susman. Be right back.
Ladies and gentlemen, boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Gray.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences. This show is a weekly trip into the world of the Disney theme parks and resorts. And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the windowtothemagic.com podcast.
Maybe there's a name for this, something like Disnotic obsession. Please visit windowtothemagic.com for more information, or you can find us on Apple Podcasts and in the iHeartMedia app.
Hello. This is Insurance Hour. I am your host, Karl Susman. Phone lines are closed today because we do have a special guest. Debbie Bremner is with us, taking our questions about how the California wildfires are impacting the real estate marketplace. But you can still call and leave your messages, and we'll get back to you. You can call 559-656-0317, call or text, or send your questions in to questions@insurancehour.com. Anything real estate related, I will just pass on to Debbie, and we'll, we'll flood her inbox. Debbie, we're talking about those poor lenders.
Okay.
What happens? What's your experience been when there's an event where people all of a sudden decide or are no longer able to pay their mortgages? How does that impact them immediately and for the long term?
So I worked with a number of lenders the last time this occurred, which was during the Wall Street crash, as everyone remembers. And a number of clients short-sailed their home.
Can you explain briefly what that means for everybody?
Short sale means the lender, you have a loan, let's call it, you have a $100,000 house. People had financed maybe up to 100%, some a little bit over. And they couldn't give the house back. They couldn't afford to sell it because they had too much financing against it. And so they gave it back to the lender and then declared bankruptcy. They were forgiven the debt and declared bankruptcy. A number of people did this, and those properties were considered distressed because they were often not in good shape and were not fixed up, and the lenders just flooded the market with those properties because they couldn't hold them. The difference in this scenario is that if everyone, or 50% of the people said, I'm not rebuilding, take my lot, lender, please, I'm done paying, and just filed for bankruptcy, the lender is then left with, as you called it, dirt, lot value. And they've got a loan against the property for the land and the structure, which no longer exists. This is a tremendous, far-reaching financial hardship for the lender that plays out in so many other ways in the community because the lenders are operating on a margin and they can't take that kind of a hit. We need to protect the community from that kind of a financial hardship. And that's what we're facing at this point.
So you're saying that if someone just decides that they're not going to rebuild and they're just done, they're going to move out of state, who knows what they're going to do.
Some are moving out of state.
Yeah, and they just walk away. The bank now has the trustee, the ownership of just the land, and a loan against that land that is never going to get paid. So what do they do with that? And does that impact other people that are looking to get loans?
Well, yes, it's going to impact. Ultimately, I think what will happen, based on just history, although this is unprecedented, but I think it's going to impact what lenders are able to do. It will probably bring other private lenders into the market who will decide to say, look, I'm going to finance that piece of property, and for you, Mr. Contractor, and you can do a fix and flip, and I'll get my money out in 4 months when you sell it, and we'll all get a little bit more whole, and I will buy the land from the lender at a discount. But then the lender is taking the loss, and a little loss is built in, but not this massive amount of loss.
So what happens to the consumer that, let's just say they don't declare bankruptcy, they just simply have the property foreclosed on? Can you explain what that actually means if you have a property foreclosed and how that impacts your ability to buy something else?
Well, again, it's early days, and we don't know what provisions will be made for those who literally cannot afford to rebuild, literally want to leave the state. And so I think rules will be set up and some sort of decisions will be made about this. But for right now, as I said, you still owe on your mortgage, you still owe on your property taxes, which are coming up. And the bottom line is, talk to an attorney. That's the best thing I can tell you. Ask your attorney what options are really available. Can you make an offer to the lender? Can you ask them to take the property back? If your property is damaged, would your attorney say, let's find a buyer who can fix it up and then sell it, and then you can maybe get out whole? I don't know. Every situation is going to be so different, and it's so hard because there's so many people that are facing this.
I wanted to just squeeze one other topic in before we take our last break. Can you tell me what type of legal disclosure requirements may be happening now that didn't before due to the wildfire, or what type of things will people have to do? I say more hoops to jump through. What other hoops will we have to jump through when we're looking to buy a home?
Okay, well, I will say that California has had a wonderful wildfire disclosure for quite some time, but the newest thing to hit the market, and what I'm recommending that my clients get, and I have no piece in this, no skin in the game, but there's something called a Fortress Wildfire Disclosure Report, and I've got one here, and I'm going to talk to you about, besides over and beyond the, I get my disclosure from the seller that says this is a high wildfire zone and you should be aware, and I always tell my clients, think about that affects not only your fire insurance, it could be a situation where it affects your home with smoke and not necessarily fire, and the house is still there, and what about your car? And we saw the evidence of that this time. I know this is a little windy, but that's the moment you call your insurance agent and say, do I have a good sense of umbrella here? And the other thing that I'm telling my clients is there's this report called, you won't be able to see that, Wildfire Disclosure Report. And what it does is it maps your property, and it says, this is what your house looks like. This is what it's got going around on it. This is the vegetation it has. It makes recommendations to the client to move or remove vegetation. It lets you know what your risk is. And my sense is, and I've been telling my clients, get this all the time, but I think insurance companies are going to start requiring this for you to write the policy, because the bigger changes I see in code coming down the line are going to be disclosure and modifying the exterior of the house. So I think there will be exterior code so that neighborhoods don't all burn, because the vegetation within the neighborhood is more dangerous or as dangerous as what's on the hillsides. So,
let's take one more break, and then I want to talk about the future of these cities and what you think is going to be happening. Again, this is Insurance Hour with special guest Debbie Bremner. We'll be right back.
Are Are you feeling lost in the search for the right insurance? Making call after call, only to find no one willing to go that extra mile for you? At Susman Insurance Agency, we understand that frustration, and we're here to change your experience. Where others see obstacles, we see opportunities. While many might shy away from jumping through hoops, at Susman Insurance Agency, we're prepared to lead. Don't settle for less. Reach out to Susman Insurance Agency at 877-411-5200. Visit us online at sussmaninsurance.com or email sales@sussmaninsurance.com. Let's uncover the insurance solutions you deserve. Susman Insurance Agency, going the extra mile every time.
Hello. This is Insurance Hour. I am your host, Karl Susman. Special guest with us today, Debbie Bremner. She is our real estate extraordinaire expert, and we're going to hear from her in our final segment about what she thinks is going to be the future. She's going to take out her crystal ball and tell us what we have to expect in California, in these neighborhoods, after these wildfires. Phone lines are still closed, but go ahead and call us, leave a message, or send a text. That number is 559-656-0317. Or, of course, you could always email your questions in to questions@insurancehour.com. Debbie, we got a few minutes to go. Take out your crystal ball. You've been doing this for a couple of years. You've seen some bad stuff happen. What do you think is going to be the outlook in 3 years, 5 years, 10 years?
Well, initially people asked me, will these neighborhoods be, the first couple nights of the fire, will things be back to normal in a year or two? And I was like, oh, no. I don't think this will be back to normal the way we think of normal now for quite some time. I think the market itself has to settle out, and that's going to take a long time to bring in essentially this many refugees into Los Angeles in a market where there was no housing. We have a 3% availability of housing, 3%. And we suddenly bring all these people in all at once. So let's just absorb that hurdle first. And then let's think about the long-term financials of this, and how do we get the money from California, from the budget, to rebuild schools and churches and grocery stores and gas stations and roads, and then what will insurance companies do? I keep watching more and more companies, and I know I'm talking to someone who knows this, but 5 companies pulled out last year, was it? Last year? And State Farm is saying non-renew to a lot of these people in the Palisades. And I think this is going to take a while to settle out, and it's going to take some smart legislation, and it's going to take neighborhoods working as communities to rebuild somehow. But I think also that city planning is going to have to think about how we can redo this so that it doesn't happen again. That takes figuring out the resources that we have, and not just fire, but that's certainly important. But just in general, how do we be more prepared as a community so that we don't lose whole cities, swaths of cities at the same time? And I think that's a long-term plan. If you were
a homeowner in some of these cities that no longer are cities, would your advice in general, and I know everyone's situation is different, would you say that it's a good investment, just an investment as far as dollars and cents goes, to stay and see it through and rebuild? Do you think values in the Palisades, for example, are going to be higher over the long term? Or is this something that's going to take decades, if ever, to get back where the values are going to be what they were before? Well, I certainly am not leaving. My house is still here, but I'm not leaving, and I still believe in real estate as an asset, and an asset that has, over the just short of 50 years that I've done this, has consistently, there's ups and downs, but it looks like this with some, like divots in it. So if you choose to live here, and I think that's the first thing, you can buy real estate and own real estate anywhere, but if you choose to live, work, play in Southern California, then fires are increasingly going to be part
of the equation. And I believe it's still a good place to live, a great place to live. I can't think of any place else that ticks all the boxes for me. But I think that being said, I think the way we've done things has just sort of been floating around saying, well, climate change, not a problem. Fires, they happen once in a while. No, we really have to address the specifics of how we live now and how we can not just protect our own house, but be smart about how we live so that we don't burn our neighbor's house down. And that's, I would still stay, but I think it's time to do some smart thinking.
It will be interesting to see how we walk that fine line between regulation and expediting the rebuilding, because that's those two things tend to go in opposite directions, right? Well, and I know that the county supervisor I watched on an interview not too long ago, you forget all of this is not too long ago. This just happened. Right?
We're talking a week ago.
Right. It feels like it was a long time ago. Yeah. Was talking about how they were going to expedite permits and just everything, quickly. And of course, the first thing I thought with my insurance mind is, well, I hope they're not going to cut any corners. They're not going to let people build homes that aren't safe, I hope.
No, I don't think that it's that. I think that essentially they're talking about Coastal Commission, which added, add that a year to your Pacific Palisades was all in Coastal Commission, and they're saying, no, you don't have to do that. I don't think it's going to affect code. What I think it's doing is they're going to say, you're going to have a more streamlined process. We're going to bring people in. Building and safety has always been shorthanded, but now it's ridiculous. I think they'll bring people in from other counties so there's more people out there inspecting properties, more people red tagging, more people doing what they need to do to get it going. But at a certain point in the pipeline, you need construction materials, you need construction financing, because most people cannot afford to build.
It's going to take a lot of planning and a lot of work. And Debbie, I can't thank you enough for being here. This has been so educational. I'm sure we're going to do this again because we are far from through all of this. And your expertise is extremely helpful for a lot of people. Thank you so much for being here. You have been tuned in to Insurance Hour with special guest Debbie Bremner, myself, Karl Susman. Stay safe, and we will talk again soon.
I do want to thank all of you for taking the time to listen today. I know insurance is not necessarily the most sexy concept. It is important that you understand what it is you're looking for, what it is you think you're getting, and finally, what you actually did purchase. You simply need to know more than you used to. Things are more complicated. If you have any questions, please reach out to me directly at 559-656-0317. You may also send your questions to questions@insurancehour.com. Informing, educating, and entertaining, one policy at a time, this is Insurance Hour. The show is dedicated to Shamrock Papa.